So in today's big conversation, we pull back the curtain on a high-stakes meeting between Parliament's Economic Committee and the Bank of Ghana. Now, this was held, remember, during recess of Parliament. Was this an honest stock take, or this was a political PR moment? Well, we'll be learning more about that. A man at the center of it all, the ranking member of the Committee of Economics, the Economic Committee, and the member of Parliament for Ofoase-Ayirebi, Honorable Kojo Oppong Nkrumah. He joins us this morning. Honorable Oppong Nkrumah, thank you for joining us. You described this meeting as fruitful. For our listeners and our viewers, what were the three most important takeaways from that session?
Inshira, good morning to you, to your viewers and your listeners. Thanks for the opportunity. I think the three most important takeaways were, first, the fact that the Bank of Ghana, set up by an act of Parliament, is answerable to Parliament. And Parliament acts on behalf of the people of Ghana. And at any point in time, when we want the data, beyond all the political narratives and the spin, the Bank of Ghana will appear. And I commend the governor and his team for showing up. In fact, the full technical bench of the Bank of Ghana, heads of various departments, were all present. And I think it was a major, may I say, reminder that the BOG works on behalf of the people and have to respond when Parliament calls. The second major takeaway for me will be the numbers behind the currency. The currency is appreciated by about 43% year to date. And there's been a lot of political spin and speculation about why. And the Bank of Ghana was then compelled to show up and provide the numbers which explain exactly what was going on. This meeting was mostly on the balance of payment trends from the beginning of the year till now. And they provided all the detail and all the reasons, and it clearly explains why we are where we are and even what will most likely happen in the future. And as we have some time, I'm sure we'll go into it. And I think the third major takeaway had to deal with all the other residual matters. Their sterilization operations, the gold for oil program, their accounts which they claimed had made a loss the previous year, and all other residual matters. We had a good opportunity again to go into those details. And again, all the facts were laid bare. I would have wished that this meeting was open to the public and the media so that everybody at first hand for themselves sees and hears what went on. And I'm hoping that in the future, these meetings will be opened up to the public and the media.
That would be something that the media certainly would be grateful for, an opportunity to really hear at first hand. But the BOG spoke about, shocks to cushion Ghana's economy. What exactly are these buffers? And based on what you heard yesterday, how sustainable are they?
So let me bring it down to the household or the business unit level. In economics, you've got the household, the firm, and then you can then go up to the industry level and then to the macro level.
That's right.
For all of these levels, when you talk of buffers or shock absorbers, essentially you are talking about assets that you have built over time and assets that you have found a way to protect in terms of value for a rainy day. Because apart from the normal trends of life, which, dictate how incomes are made and revenues are expended, you also need to find a way to build some assets and protect the value of those assets so that on a rainy day, if something happens, if there's a shock to the revenues, or there's a shock to the expenditure side, or even a shock to the financing side, you can fall on those assets or those buffers and smoothen your operational curve. So I'll give you a couple of examples. If I'm a father and I have a household that I take care of, and let's say every month I spend 6,000 cedis to take care of this household, I must ensure that at least on the revenue side, I am earning nothing less than 6,000 cedis so that I can take care of my household smoothly. But while I'm doing that, I have to build buffers or shock absorbers. So I have to get some assets, which assets are preserved in value. so that should there be a day where my father falls sick and throws my expenditure out of gear and I need to spend some more money, I don't say, oh, my income is not enough, but I can rely on those assets to cushion me. Should there be a challenge where, let's say, the business in which I work temporarily is, having difficulties and therefore hasn't paid salaries for 3 months, I can rely on those assets and smoothen my operational curve. That's the whole concept of buffers and shock absorbers. So for a country, for a nation, there are different levels of buffers. One of those is about your reserves. And usually you keep your reserves in foreign currency, what we call the international reserves. And your reserves are made up of your gold or your other mineral resources that, you are keeping. It's also made up of your other currency reserves and then your, cash reserves as you may have them. And the reserves are important because though in economic terms they are conceptualized as months of import cover. How many months of import cover do you have? How many months of resources to cover expenses do you have? And those expenses, mostly you are assuming that it's covering your imported expenditure. So your reserves constitute one of your major buffers. You can also have other buffers, for example, on your debt servicing side. So you may have sovereign wealth funds, you may have, sinking funds, etc., as buffers for debt payment in the future. Because if you look at what we call the fiscal framework, you've got the revenue, you've got expenditure, but you've also got financing in the middle. So for a country, once you are financing, this year you finance $1 million, next year $2 million, it's all piling up as debt, which must be paid at some point. And so while you are building buffers, mostly for expenditure and mostly for the currency cover, you're also building buffers when it comes to servicing the financing or the debt in the middle there. So over the years, one of the ways we measure the health of our economy, the fundamentals of our economy, is how much buffers that we have. And so you'll find that when the NPP was leaving power, we left about 4.3 months of import cover. That was about $8 billion in buffers. And we were able to do that primarily because around 2021, we changed the formula. Dr. Mahmoud Bawumia led a very strong advocacy within government, and central government accepted it, on how to change the formula to build our buffers through what we called a gold purchase program. So that enabled us to accumulate a lot of gold using the Ghana cedi, but that gold is stored in dollars and therefore to increase our reserves or our buffers. This government has continued with it. They've been able to move it up, I think, to about 11 billion, if my numbers are correct. So one of the first things that we were doing was examining the state of the buffers and how those buffers are then translating into defending the Ghana cedi. And it became quite obvious that the major reason for which the Ghana cedi has been strong is been because our external side, and when we say our external side of the economy, that refers to the exports versus the imports. The external side has performed robustly. Three major commodities, gold, cocoa, and oil, are the major contributors on the external side. Of course, you've got the non-traditional exports, and then you've also got the flows into the capital accounts, which is mostly your FDIs and your loans, etc. So one of the major reasons is that the external side has performed very well. In fact, in the data that the Bank of Ghana provided, which data they don't ordinarily, tell the public, you will find that, let me start you with cocoa. So January to June 2024, cocoa earned for Ghana $762 million. And that shows you how much earnings we were making and therefore how much dollar was flowing in because of cocoa. January to June this year, cocoa has earned for us $2.1 billion. The question that we then followed up with the governor was, what has caused the change? And the Bank of Ghana explained clearly that cocoa price, for example, had moved from 2,694. That is the price at which they were selling the cocoa stock that we had. Had moved from $2,694 to $5,313. That is a difference of 2,600. Well, actually, this is in millions. So it will be 2,000 or 2.6 million.
Yeah.
Change to about 5.3 million. And the difference is about 2.6. That's about 97% increase in the price of cocoa that we were earning first half last year versus first half this year.
Right.
If you look at the volumes, we had done 150,000 tons of cocoa by first half of 2024. Now we've done 244,000 tons. That is a 62% increase. And we asked him, so was this cocoa grown between January and now? The answer was no. So obviously, this is cocoa. Cocoa takes about 3 years to grow and harvest, and then you sell. So the volumes...
So clearly, it's not about volume, but really it's about the quantum of increment in the market price. That's giving us...
Actually, it is both.
Okay.
Volumes increased by 62%.
Right. Okay.
And then price increased by 97%.
Okay. So the combination of the two gives you that.
Absolutely.
Yeah.
The interesting thing about cocoa is that you don't grow cocoa in 6 months after you win power. Cocoa is grown for about 3 years before you harvest it. And then you've got your sales contracts that you then advance the cocoa on. So this is cocoa from previous seasons, previous harvests, and then the price has jumped up by about 97%. And that is why cocoa earnings have moved from 762 million to 2.1 billion. Then we go to gold, for example. So you'll find out that gold earned the same time last year 4.6 billion. Now gold is earning for Ghana 8.3 billion. So again, we went into the details. Gold pricing has gone up by about 43%. If you compare first half of last year to first half of this year, gold prices have gone up by about 43%. Incidentally, by the way, you notice that our currency has appreciated by 42%.
That's right.
Gold prices have gone up by 43%. So we look at gold volumes. Have we exported a lot more gold than we did? The increase in gold volumes is not even more than 25%. So gold is benefiting heavily from the price adjustment upward, mostly because of the uncertainties on the global market, all these trade wars going back and forth, and then the fact that central banks are now buying a lot of gold to back their currencies. So the demand for gold has gone up, and because supply hasn't globally corresponded, the price has gone up. So two of the major reasons on the external side, which is mostly price, and then in the case of cocoa, volume, is cocoa and gold that have shot up. And because their prices have shot up, Ghana is earning a lot more dollar. And that dollar is what is now being used to help defend the city. And I'll explain how it's being done in two different sides. Crude oil earnings have gone down by about 20% because our oil fields have not delivered what they have to deliver. And it is expected that in the second half of the year, they will resume delivering what they have to deliver.
So that's sort
the
of
first
gives...
the currency that the external side has performed very well. And so the banks have a lot more forex available to them, supposedly. And the central bank also has a lot of forex, which it is dumping on the market. The Bank of Ghana said it didn't have up-to-date data on how much they have supported the currency with. We suggested to them that first, they cannot deny the 1.4 billion for the first quarter. And by our estimate, by now they are hitting over $2 billion injection to suppress the city or to, support the city, whichever way you choose to look at it. And the Bank of Ghana could not deny that as well. So it was clear what was happening on the currency side. The prices of our major commodities are earning a lot more, and that is being used to push down the Ghana city. That's a major contributor. And the major reason it's showing up, among other things, in the area of gold which comes from the gold purchase program that was started in 2021. And that is what they are following to be able to earn gold forex to push down the Ghana cedi. But then that raised the question of sustainability. And they are now coming to the view that there's a lot that they need to do to sustain the levels of the currency, because you cannot trust that these gold prices will be where they are in perpetuity.
Mm-hmm. Now, talking about sustainability, could this be the reason why there's talk of hedging about a third of our gold?
You're absolutely right. And so the governor answered the question clearly that yes, they are now taking a decision to hedge about a third of our gold, primarily because yes, you cannot expect that the gold prices will stay wherever or stay where they are now forever. There's uncertainty that is translating into these prices. What if this uncertainty is cured somewhere down the line? And so they are now going to start an exercise of hedging about 1/3 of our gold reserves. By our calculation, that's about 1/9 of our total reserves, so that they can, protect that side of the international reserves in particular. And should gold prices get restored to where they traditionally are expected to be, then Ghana doesn't suffer too much from that. And the reason is that what is happening is irregular, and they are build their own insurance mechanisms against it. And we think it's a good idea that they build the necessary insurance mechanisms against what is happening on the market now.
What did the committee learn about the Gold for Oil program? I mean, this is something that started in the previous administration. And I must say, I could be fabulously wrong on this, but for a change, one could say that a policy that was initiated by one administration is being carried on, even though the political ideologies are different.
To be honest, they are carrying on a number of the policies which were started, except that these policies take time before you get the full benefits. Unfortunately, sometimes they are blinded by politics, and so they don't want to give credit where credit is due. And, at the risk of sounding like a broken record, I go back to the gold purchase program, which had not been happening. 2021 is when it started. It moved our gold reserves from 8 tons to 30 tons. That was a growth in 22, or a growth of about 22 tons in a period of about 1.5 years. Amazing, significant.
Yeah.
An innovative measure of using the cedi to grow our external reserves. And it is one of the major things that they are doing to be able to continue with a gold export or a gold purchase program, which then comes to grow our reserves. And then you can use those reserves to defend the currency. But of course, they pretend that this was not the case and that they will not give credit to anybody for it. Now, in the case of gold for oil, you'll recall that the government, when it came to power, announced that they had cancelled the program. And then after announcing they had cancelled the program, the finance minister came to Parliament in the mid-year review and claimed that there was no gold for oil program, and that in fact there was no butter. We said, no problem, there's no need to argue. So the committee invited the Bank of Ghana, and we put a direct question to the governor. Mr. Governor, what was the total value of oil cargoes imported into Ghana under the Gold for Oil program? And he invited the technical team that ran the program to come and respond. The team came and showed us all their data. A total of 1.7 billion Ghana cedis of oil cargo was imported through the Gold for Oil program.
Okay.
About 26% of it was financed by direct butter. And then the 74% of it was financed by forex that you earn when you sell the gold. So if anybody tells you, like the finance minister tried to do, that there was no gold for oil program or there was no barter, that is false. That's just propaganda. The data from the Bank of Ghana is clear. At least $1.7 billion of cargo was imported. Now, let me just explain the impact of this $1.7 billion. If you didn't have a gold for oil program, you need to go back onto the reserves to find $1.7 billion to go and import this cargo. And once you are demanding $1.7 billion, once demand goes up by $1.7 billion, precisely because you don't have the supply of $1.7 billion hard cash, it will shoot the price up. So not only did it secure cargo of $1.7 billion for Ghana, at least, but what it also did is that it took away demand of $1.7 billion from the currency markets and more or less defended our currency, our cedi to that tune. Because if that demand had hit the market, the currency could have gone way higher than the 14 on the interbank market that we observed getting to the end of the year 2024. So as a matter of fact, there was a gold for oil program. The numbers have been put out by the Bank of Ghana.
Great. Honorable Oppong Nkrumah, thanks very much. And if you just joined us, you're listening to the Asase Breakfast Show. And yesterday, the Economic Committee of Parliament met with the Bank of Ghana as by law are required to do so. And this is supposed to be a biannual meeting where the Bank of Ghana is able to pretty much account for what they've done so far and take feedback and some oversight from the committee. Now, Honorable Oppong Nkrumah, who is ranking member of that committee, joins us to give us insights into how that meeting went yesterday. We've been able to have a look at a number of things, including how the gold purchase program, which was started in the previous administration, has been continued by the current administration, along with the gold for oil program, and the fact that the buffers that we have at the moment are, on a number of things, largely price increases because of some of the fallouts from the global geopolitical crisis that we're seeing, the tariff wars. Gold has gone up by 43%, and that's also seen a certain amount of increment in the volumes that we're exporting. I think we're gone from about and then you've seen an increment from 150,000 tons of cocoa to 240,000 tons of cocoa, coupled with the increment in pricing affecting our reserves and therefore putting us in a pretty good position. Now, the question of sustainability has also been addressed, that the Bank of Ghana is looking at hedging a third of our gold to ensure that as things change and gold gets back to where it used to be or where the watchers are expecting it to be outside of all these geopolitical shifts, we're not found wanting. Now, Honorable Oppong Nkrumah, our exports have remained heavily reliant on these few primary commodities, for the lack of a better expression. Did the Bank of Ghana in that meeting yesterday indicate what concrete steps are being taken to diversify our export base and probably look at adding value locally for exports so that we are able to continue to shore up our balance of trade externally without necessarily relying on just gold, cocoa, and oil?
So, in fairness, that is not the Bank of Ghana's place or their job. They are the government's banker, and they therefore keep the numbers. That policy decision is an economic policy decision from the government. And the way a government does that is mostly through its industrialization program. Because industrialization is what will give you the opportunity to add value to various raw materials before you export. The previous administration had a one district, one factory program aimed at helping us to add value to our non-traditional exports. And you would have seen, if you look at the numbers, that our non-traditional export earnings was also growing. In fact, if you look at the latest data the Bank of Ghana gave us, you will notice that the non-traditional exports this time last year was about 1.4 billion. It's now about 1.8 billion. That's about a change of about $400 million in non-traditional exports. And it's mostly as a result of the work that was done by the Ghana Export Promotion Agency, the 1D, 1F Secretariat, aimed at improving the way we add value to raw materials for the purposes of export. This government has truncated the 1D, 1F program. And in its place, they have informed us that they have what they call the 24-hour economy program that is supposed to help grow industries so that they can grow the non-traditional export side. It remains to be seen. But one of the clues that you will see is on the FDI inflow side. If you are seeing a lot of FDI inflows, what it suggests is that you're going to see a lot of investments in the industrial and extractive sectors, which would then add value to raw materials coming from agriculture or from the extractive sector. Now, if you go into the data, you'll find out that for the first half of the year, FDI flows into the country, which will give you a clue of what is about to happen maybe in about a year or 2 years' time on the non-traditional export side or on the export side generally. FDI flows was about $1 billion. $1 billion flowing in for FDI. And so again, we asked the Bank of Ghana which sector, and the Bank of Ghana admitted that it was mining. If it's mining, then it is not going to add to non-traditional export. It's going to go back into the traditional export space, which is mostly going to be in the minerals space. But again, you ask them the question that, so what is the, for want of a better expression, gestation period that it takes for somebody to conceptualize a mining investment in Ghana, mobilize the equipment and all, and then bring this 1 billion? It takes nothing less than a year. So again, it is obvious that this 1 billion is not from new investments that people started conceptualizing in January. It's from work that has been done at least about a year prior to now for these flows to come in. But the hope is that the government doesn't drop the ball on the non-traditional export promotion side. Now that they've canceled the 1D1F program, the hope is that they are quickly able to replace it with another program that can deliver similar or better value. Because the non-traditional export space creates a lot of jobs rather than the, gold and oil space. You can have one oil rig on the high seas and the total number of people on it are not more than 1,500. But in the non-traditional export space, you can have a lot more jobs producing, non-traditional commodities for export. So we wait to see the program that they will use to replace the 1D1F program and what its impact will be.
Okay. Now, on the matter of the sterilization efforts, could you share with us what the committee, what the briefing was and what the committee makes of the progress made so far?
You see, that was a very interesting part of the conversation to explore because remember that prior to 2025, Deloitte, for example, had done a forecast that if you looked at the inflation reduction program that the MPP was running, inflation should come down to about 11% this year, average about 11% this year. And this government promised that they were going to do better. So as they came in, if you recall our very first budget debate in March, we drew their attention that they also can't be targeting 11 because they're supposed to be doing better. Now, if you look at the data, one of the tools that they are using is the sterilization program, if I can simplify it that way. So essentially, because of the inflation targeting mandate of the central bank, they have various tools to help them rein in inflation. One of those tools is the sterilization toolkit, which they use to, catch excess money in the economy and sterilize it, store it, so that money is not available to fuel demand. So there are economists who consider that, by the way, as an artificial measure. Because if you just suck the money from the economy so that the people don't have the money to demand, you haven't really cured the drivers of demand. You're assuming that one of the drivers is excess liquidity in the economy, when actually it could be because of imported demand, it could be because of the fact that the producer price index is going up, etc. Okay, but it is part of their toolkit. From January till now, you'll find out that, and we put our numbers to them. In particular, the minority side, we shared with them that our calculations suggest that you've sterilized about 60 billion cedis from the Ghanaian economy. You've sucked it from the Ghanaian economy with your sterilization toolkit. True or false? And I was impressed when the Bank of Ghana side admitted that our calculation was right. It was about 62 billion that they have sterilized. And that is what is also contributing to the fast pace of inflation reduction, because by sterilizing that out of the economy, it's not available for people to purchase goods and services with. So when you go to town, you hear people say, Sikeni Krum, Sikeni Krum. It's partly because of the sterilization, the excessive sterilization they are doing. And we asked them a question, how does that compare to same time previous year? And they admitted that same time previous year, they had rather injected about 8 billion. Our model was that, listen, it was important, among other things, to inject some liquidity into the economy, to assist in, paying contractors, to assist in getting some of the projects ongoing, because it creates a lot more growth and jobs. And therefore, you'll find out that on the performance side, our growth then ended up at about 5.7. So it was an injection of about 8 billion, same time last year. They have sucked about 60 billion. The consequence is that you'll find that there's very little liquidity to pay contractors, to create new jobs, and to impact growth. But more importantly, and this is where I drew the governor's attention to this, if you look at the total market capitalization of the Ghana Stock Exchange, if I'm correct, it's about 140 billion Ghana cedis. If you work out 60 billion as a percentage of 140, that's about 42%, or about 43%. So think about it clearly. The government has a choice. When it says that there's so much liquidity in the economy, about 60 billion for half a year, the government has a choice to work with economic players to move that money, for example, into the productive sector. Stock exchange, for example, the venture capital trust fund, for example, the angel investor networks, for example. Why? So that money will serve as equity to fuel productivity. The government has made a choice that they will rather use the BOG sterilization toolkit to suck it out of the economy. Yes, you will get inflation continuing on the path, but you will see that on the productivity side, productivity is not opening up as much as people want it to expand. People want the economy to expand so that more businesses are created, they can get jobs and they can get incomes. If what they are getting is more sterilization, then that's the money you are taking out of the economy. But as a matter of fact, the Bank of Ghana admitted that they have taken out 60 billion from the Ghanaian economy in the first 6 months of the year. And we expect that they will do some more sterilization even between now and the end of the year. It's a choice they have made, and the consequence of the choice will reflect in growth and jobs in the Ghanaian economy. Growth, jobs, development, and projects are the places where you will not see the money going. So again, I'll give you another example. There are road projects that require financing. If the government had worked out a public-private partnership model, and this 60 billion had gone into a PPP model, a private player can pick part of this 60 billion and do those road projects and toll it. But the government decided to suck the money out of the economy as part of its inflation reduction program. And the consequence is that road project will be waiting for the finance minister, who doesn't have money, to find money and fund for him. That's the choice. Because, economics is about making choices and bearing the consequences of those choices.
Well, it's important to ask at this point that from your perspective, how sustainable are these frameworks in the long term? It may have stabilized the city a little bit, if not a whole lot, but we have seen similar trends that the city tends to do well when a new administration takes over. And then once the capital expenditure starts flowing in, the economy starts sort of, gear starts shifting, then you see the city running away a little bit. Are we in a place where we can expect to have this stability over a sustained period, or are there things we need to guard against?
I think every patriotic Ghanaian should be hopeful that this that this stability is sustained. Every patriotic Ghanaian must ask the government to do that, hope for it, and contribute ideas to make it happen. Okay. Let me put that as an underlining comment. But the question is, if you examine the various variables, how easy is it to do that? So let me use the currency side. On the currency side, it's become clear that it's the external side that is performing, and therefore there's a supply of forex, which forex the central bank is dumping on the market to, as it were, suppress the cedi. And they are now recognizing that in itself is not sustainable. So now they want to hedge a portion of the external side earnings. That's about a third of the, gold purchases. They want to begin to hedge that because, of course, they are beginning to realize that this one is not sustainable. You ask yourself, how often can a government dump about $2 billion on the market to suppress the currency? That is not very sustainable. And so at some point, the market support or the market intervention will have to be tapered down. But you also ask yourself whether on the structural side of the economy, in terms of our import demand, anything is being done to reduce it. Because that is what, in the end, will help shift the balance. When the export earnings taper to their real level, if you haven't tamed the import demand for Forex, then you're going to end up in a place where that import demand may be a bit higher, and therefore your currency starts coming under pressure. In fact, today, there's a belief in the market that despite the fact that the external sector has performed very well, which is what is holding us up, the import side is being suppressed. The real import side is being suppressed. And I'll explain to you. A lot of importers are complaining that they go, in fact, not just importers. Yesterday, I spoke to one journalist who said that he needed to pay $6,000. He's filed paperwork, $6,000. He's filed paperwork at his bank. And the bank for about 3 weeks has not been able to transfer the $6,000. There's a belief in the market that the banks and the central bank are suppressing demand by using this paperwork argument that, oh, your paperwork is not intact. So they are regulating how much demand comes onto the market. So if the real demand, let's say, is about $200 million a week, they are using paperwork to deflate it to, let's say, about 100 million. That way, because they only have about 100 million to supply, the price at 10, which they have pegged, will not change. That's a suspicion on the market.
Wow.
The central bank admits that, A, there's a lot of Forex supply to the banks because the external side is performing well. But B, they also don't dispute people who are saying that they are not getting the dollars. So C, what they are going to do is that they are going to investigate. So now they started a process of investigating the nostro account holdings of the commercial banks. The nostro accounts are the foreign accounts that the commercial banks hold in other jurisdictions. And that's what they use in doing foreign settlements. And then also the net operating position on foreign currency of the banks locally. So the central bank now wants to investigate the commercial banks to see whether or not they are hoarding Forex or that the real supply is what is showing up on the market, which the traders and people who are demanding are saying that they are not getting. In which case, then you can say that there's actually pressure on the currency because the demand is outstripping supply. So in terms of sustainability, the central bank is realizing that you cannot continue dumping the Forex earnings on the market forever. You have to start hedging against a rainy day. Remember our earlier conversation?
Right.
And then B, you need to ensure that there's actual supply on the market, not an artificial rate, which is not backed by supply. And that's why they are now going in to investigate the commercial bank. So that's on the currency side. On the, may I say, economic activity side, that will not be so much the central bank, but that will be on the fiscal authority. So the finance ministry and perhaps the broader government. They need to spend to fulfill the promises that will bring growth and development. If you promise that you're going to build a factory in some part of the country, or you're going to build an enclave, let me use your 24-hour economy program. You're going to build an enclave that allows people to build factories. That enclave, you need to spend roads, electricity, security, water, internet, etc., so that people can go there and build businesses. If the finance minister or the fiscal authorities are cutting expenditure by about 19 billion in the half year, and they are cutting because they did not conceptualize the revenue side well, and because they don't want to lose the deficit promised, they have to compromise by cutting expenditure of 19 billion. You can't build that enclave. So is this model sustainable? So I think they are realizing on both sides, on the monetary side and on the fiscal side, that yes, the shock therapy has brought some stability, but it's not sustainable. And therefore, they have to start making adjustments. The devil is always in the detail when you start making those adjustments. So when you start hedging and you're not dumping, when you start tapering down on the interventions that you are making, when you start realizing that the demand is actually higher than the supply, the question of sustainability will be answered on the currency side. On the fiscal side, when you start realizing that the revenue program has failed, and therefore you are not able to raise as much revenues as you require to fund the promises you have made, that is when you see whether or not it's sustainable. And today, for example, I'll use this as a last example, it's showing in cocoa prices. So when you make an announcement that cocoa prices should be 6,000 cedis, that's easy to do. And then now you have to calibrate, and you don't have buffers to close the gap between what you have promised and the 6,000 cedis. I mean, buffers to close the gap between the 6,000 you have promised and the reality on the ground. If you are even using the right exchange rate, etc., that is when the rubber meets the road, and the cocoa farmer will tell you that you have scammed me. So it's only the beginning. I'm sure that as time goes along, we'll have some more data to examine.
Yeah, I mean, the committee exerts its oversight rights on the Bank of Ghana as demanded or required by the Constitution. And I believe that means the committee is able to frankly share ideas with the Bank of Ghana on how it can improve on what it's doing. Some analysts have said that it's about time that the central bank considered a tailored forex incentive or credit instrument to support firms in the non-traditional export area. People playing in, or businesses playing in the agri business or textiles or IT services subsectors. What's your take on that tailored forex incentive, for example, as a way to improve on the balance of trade, but also keeping the pressure on the cedi at a minimum to extend the sustainability of the current stability we're seeing?
The devil will be in the detail. It will be important to hear those who are making that proposal back it with some detail that answers that question. What I know is that the Republic of Ghana has tried to answer that question through the Ghana Exim Bank. And so we used to have one vehicle, I've forgotten the name. It was an export financing guarantee entity. And it was now converted into the Ghana Exim Bank, which was supposed to...
ADF, wasn't it? EDF, yeah. Export
which
Development and Agriculture,
yeah. Which was supposed to, A, be able to advance credit to the non-traditional exporters or provide them guarantees to be able to take credit for their non-traditional export activities. B, work on the back end with the central bank to be able to give them some, forex hedging or forex cover in some of these transactions. And C, in between, be able to mobilize on their own balance sheet resources that will help them to do these two. So you notice that we try to get money from KFW and some of the other international development banks to help Exim or to put them in a position to do this. So I think that the Republic has tried to answer that question. The question for me that remains as a dominant question is, how effective has this been? Has the money gone into the right sectors? Have they funded the right projects? Have the export earnings that have even come from these projects been properly retired into the nostro accounts and retired into the jurisdiction? So I think some more interrogation of how Exim has functioned will be my first option. If on the currency side, on the forex incentive side, Exim still requires some help, then I would agree that yes, the central bank can look at ways by which it can assist Exim from a wholesale point of view, and Exim can then do that for the non-traditional exports. I will not be quick to recommend that non-traditional exporters flip and now start engaging with the central bank on forex comfort arrangements.
Great. Any final thoughts on the overall performance and going into the future? I just allow me to there's this phrase. Actually, it's a bit of scripture from Paul's epistle to the Thessalonians, because he says, when they say peace and safety, then sudden destruction comes upon them. We're in good times now. The Project Ghana airplane is nose up and climbing steadily. How do we ensure that it doesn't come crashing down? What do we need to do?
It reminds me of the first parts of 2017 when we came to office, and we were trying similar things to bring stability. And then you now get into the program where you have to now advance your economic agenda. On the fiscal side, you now have to start spending and investing in your programs, hoping that those programs will deliver the results which will, pay off or pay back. And then on the monetary side, you are trying to balance with what the fiscal authorities are doing, particularly on your inflation targeting, etc. And you recall that we were successful for about 3 years. Inflation even came to single digits. Some people forget. From about 2018 to 2019, I think heading towards 2020. It was after the 2020 crisis that the shock absorbers that we had built got expended because we had gone heavy in defending the people of Ghana on the COVID program. And then by the time we hit, I think 2021, 2022, we were hit by the global cost of living crisis following the battles in the Black Sea area. And at that time, we didn't have buffers to hold us. And so there was a pass-through. Thankfully, by 2021, 2022, Dr. Baumia and the EMT made these recommendations on how to rebuild those buffers very quickly using the gold purchase program, etc. And it is those buffers that we started building, which today are crystallizing. And therefore, despite the fact that there are still some shocks, now we've got buffers in place that are holding us. How sustainable is it, is your question. I think one of the ways to assure sustainability is through transparency. If you make the data available and if you are honest with it, that listen, guys, the external side is doing very well. It's also doing very well, partly because of the gold purchase program that was introduced on your tenure. We can even share with you where we succeeded and failed, and you will be better off, and Ghana will be better off. So I think part of it is transparency, not always trying to obfuscate and hide things. And this government is very fond of that. Sometimes the propaganda desire is a bit too much for them. They bring a $360 million loan to Parliament. They say it's a $360 million financing facility. If you are not careful enough to double click and go into the details, you won't realize that it's going to add to the debt stock. They bring a levy on fuel for 8%. Then they, obfuscated that, it's only 1 Ghana cedi per liter, knowing very well that nobody buys petrol per liter in this country. I can give you countless examples of how they try to hide things. They want to pass a bill, they come midnight under certificate of urgency. So that lack of transparency and candor is what the government should resist from. They should be transparent and open with the data and allow various stakeholders to weigh in on the development. You get the best ideas from that point of view. Number 2, I think specifically, we must always keep an eye on, strengthening our buffers. We can't spend everything we have for today's comfort desires. If we don't build our buffers, we're in a world today where the shocks are going to keep coming. If we don't strengthen our buffers, should we be hit by some next crisis on the horizon, we will be back to the point of 2021 where there were no more buffers to hold us up when the global cost of living crisis came in. Number 3, I think that the government needs to go back and recalibrate the framework that they are trying to use to deliver on the promises they've made. The promises are now a social contract with the people. You cannot meet those promises if you don't want to raise revenue, or you don't want to bring in public-private partnerships, or you don't want to allow the central bank to play its full role where it has to come in and assist government. You can't square that circle. So you've got to relook at that framework and correct it. Either than that, what you have to do is to be cutting expenditure. And as you are cutting expenditure, you are affecting growth and incomes and jobs, and you can't fulfill your promises. So be honest and deal with, in particular, the resource mobilization part of the framework you are using. That's what will enable you to get the resources to deliver and to satisfy the people's desires of growth and jobs and incomes. That's what I'll say.
Great. For me, it's evident that markets will always move, prices will shift. But the bottom line is that trust is what anchors an economy. And so the central bank's credibility and Parliament's oversight must remain sharp because that's how we end up staying resilient. I think that I commend you and the members of the committee for a good job done. And we look forward to more of these engagements. Thanks so much, Honorable Oppong Nkrumah, for making time for us this morning.
Sure, thank you for having me. I also want to commend the committee. The committee works in a very professional, bipartisan way. Our chairman and members of the committee, I want to commend them. I also want to commend the central bank, Governor Isiama and his two deputies, Zach and Matilda Santiago, and the entire technical team of the bank that showed up to provide all of those details.
They literally brought the entire bank to Parliament yesterday.
They literally brought the entire bank to Parliament. But I think that this level of transparency is good for the Republic.
Great. Thank you very much. And more grease to the committee's elbows. And we hope to catch up again soon.
Thank you.
Thank you for watching. Like, comment, share, and subscribe.